Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, a turbulent session. Let's have a look at where the local market is finishing up the day after starting on a very positive note. We're up by close to 1% on the open, and we finished higher there by just around 0.2% on the CBO 200. Getting you a quick read on where the ASX 200 is finishing the session after a positive start as well. Look, it's pretty much flatlined, up just 4 points, 7,857. Started to see US futures go negative in the afternoon session as we heard news that Israel has launched a pretty aggressive strike on Hamas, of course putting a lot of concern about the ceasefire potential at risk and sending markets lower. So that's why we've called it Tuesday turbulence. Of course, what happens when there's turbulence? You see a lot more money going into safe havens, and gold very much played that role again today, hitting a fresh record high and breaching again through $3,000 an ounce, and of course giving a lot of support to our gold players as well. And then a very busy week on the central bank front. So tomorrow we've got the Bank of Japan and the Fed also kickstarting their two-day meeting, and later in the week we have the BOE also with their rate decision. So a lot to digest. Had a great chat with Paul Bloxham from HSBC earlier about what he thinks in terms of all the central bank action. You can find that, of course, on our website, ausbiz.com.au. Let's get into some of the sectoral moves, though, and kicking it off with gold. Amid the flight to safety, Newmont was certainly the front runner, up 2.5%, just under $75. Evolution Mining also looking strong, along with Regis de Grey and Northern Star. And interesting, I was reading a note from Citi, and they actually prefer Evolution to Northern Star. Looking at the banks, CBA, of course, coming under a little bit of pressure, closing pretty flat, but when it falls, the overall index, it drags rather, the overall index down with it, of course. And then having a quick look as well in terms of what we saw from the miners amid the depressed iron ore price. Fortescue down by 2%, $16.62. A lot of concern, of course, about the health of the China economy as they continue to try to boost consumption. Let's have a look at some of the stock specifics today. And we heard from coal miner New Hope reporting net profit after tax up 35%, sending shares up almost 10%. They also lifted their dividend to 19 cents from 17 cents last year. Gold Road coming under pressure. It's anticipating lower production at its Gruyere mine for the March quarter. Telix Pharmaceuticals also ending in the red. Its lead prostate cancer imaging agent, though, has been approved in Brazil, which is a start to enter into the Latin American market. Austel up after South Korea's Hanwha acquired a near 10% stake in the company. And Avita Medical entering into an exclusive manufacturing and distribution agreement with Stedical Scientific, shares up 4%. Let's welcome to the COB Henry Jennings from Marcus Today. Great to see you as always, Henry. I guess this risk-off momentum that we saw in the latter part of the trade, just again showing how precarious these markets are at the moment.
Yeah, hi Juliette. Yes, I mean, I don't know if it's precarious so much as just cautious. You know, it was never going to be a V-shaped recovery, let's face it. The market went down in a spectacular fashion during that sort of Ides of March period. And it was never really going to be the V-shaped recovery. It's certainly not one that we thought was going to happen. You know, there's been fingers burnt, confidence lost. You know, even the big stocks, the big name stocks were smacked around the head this time out. So it was always going to take time. I think baby steps is the answer. We've got an FOMC meeting, we've got Bank of England, we've got things going on in the Middle East as well. And of course, we're drawing closer inevitably towards that April the 2nd deadline, which is where all these tariffs come in, these reciprocal tariffs, if you like. I'm not sure that's a reciprocal, but that is certainly, you know, that is on investors' minds as well. So at the moment, it's kind of, you know, 2 steps forward, 1 step back, I guess, because we had such damage done, you know, with that sort of 10% fall from our high on Valentine's Day. It's only the 18th of March. You know, it's only, 5 weeks ago that we were all crowing about how good the market was and how it was the easiest thing in the world to make money in this place.
Yep, well, certainly we've been shown what is really the reality. Let's talk about some of the stock specifics today.
Yeah.
And I mentioned New Hope, up nearly 10%. So obviously the market liked its update.
The market did like its update, and don't forget that it was only the other day that Macquarie was downgrading all the coal stocks as well. So, that's really helped them in some respect. Any kind of earnings surprise is always good, and certainly a raise in dividends is good as well. So I'm just getting the chart up as we speak, and it was one of those sectors that really got whacked about the head the other day. So it's good to see it coming back. It will certainly help Soul Patterson's. But, this stock's still fallen from $5 pretty much at the beginning of the year. It's back up to sort of $4, so that's not bad. But, I think there's still a long way to go for this one to get back to its former glory days. But the results were good. Dividend up, that certainly helps. But the underlying coal price still is the key to this, as it is with all resource stocks.
Well, let's get to the big one, gold, because of course breaching through again 3,000. I mean, is this where we just sort of play it now, given that you haven't sort of seen the price or the action in terms of some of these gold miners match the physical commodity?
Well, I don't know about you, Juliet, but some of these miners have really well and truly matched the physical commodity. We've been long Spartan Resources, which got a takeover, let's call it a merger, shall we? Because that's what they're calling it, a merger the other day. So, the gold stocks have done very, very well and done very, very well for investors. My concern, I guess, with the gold price at the moment is that every man and his dog seems to be long gold. Everybody's jumped on the gold trade because we do this from time to time. We jump on the easy money. We jump on the momentum. We did it with lithium. We do it with copper. We did it with tech stocks. Whatever's in vogue at the moment is kind of the easy game to play. And a lot of people have jumped into the gold sector. So that does concern me a bit. As you are aware, my pick was Newmont for 2025. I think it was about $60 at the time. It's now up to $75, which I had said in our newsletter was a good place to take some profits. And I hope people are reminded about that it might be a good place to take some profits at $75. My target was $80. But, these gold miners are chock full of cash. They've got a lot of money, and there's a big M&A cycle coming. We're seeing it, with Spartan. We've seen it with a couple of others in the space as well. Newmont especially, they've sold a lot of assets at good prices. And this gold price at $3,000 is pretty good for these guys. They should be pretty happy, I have to say. But I am just a little bit cautious. I hate these crowded trades where everybody is long, because who else is going to come in and pump it up? And when the US talking heads on a rival channel that we sometimes watch, CNBC, of course, nowhere near as good as Ausbiz, but sometimes I do watch it. When every talking head in the US, who usually is talking about tech stocks and Nvidia and whatever, starts talking about Newmont and the gold price, I start to get a little concerned. That's all.
Is it sort of like when your taxi driver starts talking about stocks as well? What about the iron ore price? I mean, we touched on China. Obviously, Fortescue looks like the one that's being hit hardest here, under $17.
Yeah, I mean, the iron ore price hasn't really done much. Let's face it, it hasn't actually fulfilled some of the promises or some of the forecasts that some people were talking about on the negative side either. It's still holding above that $100 level, and we are seeing more stimulus coming out of China. Although, we've seen this before. We don't get the bazooka fired anymore. It's kind of piecemeal. It's kind of bitty. It's kind of, the question always is, where do they get the money from for all these sort of stimulus programs? But, there's certainly, I think it can't be a bad thing that President Xi is being courted to go to Washington. I mean, that's certainly a good thing in Sino-US relations. So, I'm relatively, I guess, a little bit optimistic about China. That the stock market there is going gangbusters at the moment. Another good day today, up only 0.2, but Hong Kong really going well, up 1.8%. So, Asia is sort of bucking the trend at the moment. Whether that will continue after April the 2nd with those tariffs remains to be seen. But for the time being, Asia is not a bad place to be. Maybe we've got Asian exceptionalism rather than US exceptionalism just for the time being.
And just more broadly, let's talk about the macro picture. I loved your piece yesterday for The View about Trump. What is he trying to achieve? And you can't make an omelette without cracking a few eggs. Have you been able to find an egg, Henry?
Yeah, there's eggs everywhere. Let's face it. There's plenty of eggs. I've got no problem with eggs. And in fact, the US, the egg price has dropped substantially. They haven't had any avian flu outbreaks for the last 2 weeks. And surprisingly, the cure for inflation is always inflation. So the high price of eggs really crimped demand for eggs, and as a result, we've seen some substantial falls in the egg market. I know that's kind of a bit sort of left field, but it is symptomatic, I guess, of the problem with inflation, that it is beyond the control sometimes of central banks. It is beyond the control necessarily of governments, although clearly some of the policies they put in place against avian flu have helped. But, as I wrote yesterday, there are some things that Trump is trying to do which are not easy things. Getting the US debt down from 36 trillion is not an easy thing. It's not just Biden that loaded the US up with debt. It has been, Donald Trump did a fair amount of that under his own administration first time out. Admittedly, he had COVID to contend with, but, the US has been living on this debt drug for some time. And we're coming off these policies that have been in place for 70, 80 years in some cases, especially with national security and NATO, etc. And it is an air pocket. You've got Scott Bessent, who clearly, when you listen to him, is a grown-up in the room. And I take a lot of optimism, I guess, from what he's saying. But it's not easy to change the world's biggest economy overnight, and going from public spending to private investment is always going to be a transition, and that transition can be lumpy and it can be painful. So I think, we're seeing that at the moment. How long it lasts and how deep it gets remains to be seen. As always, it will be about the US consumer and how willing they are to spend through the lumpiness. But, the retail sales numbers we had out last night weren't as bad as some had predicted. So maybe they're going to spend through the lumpiness. Maybe they're going to buy now, pay later on the lumpiness and the transition. Who knows?
All right, cracking summary. Excuse the pun. Henry, thank you as always. Henry Jennings, Marcus today. All right, the stock of the day today, New Hope, Michael Wayne from Medallion Financial and Mark Moreland from Value 3. Join Nadine.
One of the high quality coal miners on the ASX, probably in the same basket as Whitehaven Coal. They do trade on very low multiples and have been sort of spitting out some very good dividends. And this is sort of the question going forward for a lot of coal companies. Are they able to recycle that cash into the business, go out and purchase other assets? Because it's become very difficult to get new mines off the ground. So they are sort of seen as a bit of cash cows at the moment, but they are somewhat ex-growth in the long term given the lack of opportunities on the horizon.
It's nearly impossible to get new mines up now from an environmental point of view. Therefore, those assets are guaranteed to do really well over their life. And we aren't changing anytime soon where we can flick the switch and get rid of all this baseload power. Or turning it into green. It's not. Eventually it might happen, but it's not in our investing time frame. Mm-hmm. So I'm starting to buy.
Well, that is one of the leaders of the day. So let's have a look at the others. Clarity Pharmaceuticals there up by 13%. New Hope up almost 10%. Liontown also getting a good bid today, along with Megaport and Challenger. To the downside today, as we started to see a wobble coming through. Zip. Now, Henry was just telling us about his pick this year. Remember, last year his pick was Zip, which had rallied quite well in 2024. Today, down 5.3%. Ordinate, Gold Road, A2 Milk and ALS also coming under pressure. In the small end of town, we had Aspire Mining out with a good session, along with Final, Arufa Rare Earths, AMA and Antinogen Medical. To the downside, these stocks, including Energy Transition and BetMakers Tech, not having a great session. Not sure what happened to Pan-Continental Energy with a 44% drop on a 1 cent stock there. All right, having a look at what we are looking out for tonight. US housing starts and building permits coming through for February, along with US industrial production. And that's, of course, all before the interest rate decision that kicks off on Wednesday local time, Thursday our time is when we'll hear what happened. But of course tomorrow locally, the BOJ policy rate decision, the Westpac leading index, and we should point out the BOJ is likely to keep its policy rate at 0.5% amid growing concerns that the global economy will be pushed down by US tariffs and other factors. And ex-dividend, we also have Auckland Airport, Genesis Energy and Helia Group. Let's recap where the local market has finished as we started to see a bit of a wobble in the afternoon trade. US futures, of course, turning negative amid this concern over the escalation of tensions in the Middle East. Gold pushing through another record, and the ASX 200 up just 6 points, 7,860 points. All right, that does it for AusBiz for this Tuesday. We'll be back bright and early from tomorrow, 9:45 a.m. Eastern. Catch you then.